So just a reminder about the accounting cycle. We start by analyzing transactions, starting at journal entries, and then we go ahead and post items to the ledger accounts. We then make an unadjusted trial balance to make sure that the debits and credits match. Then if there's any problems, something missing, we put something in the wrong spot, rather than erase, we actually go and make what's known as adjusting entries to make sure that we account for the errors. It could be that we posted to the wrong account, could be that we didn't understand which chart of accounts were supposed to be used, but we make adjusting entries. Then you go ahead and make an adjusted trial balance, and from those adjusted trial balances where the numbers are now checked out, you go ahead and make those financial documents such as a balance sheet, income statement, cash flow, and profit and loss. And then finally, you do closing entries. We talked about that at the end of the month, you want to make sure that you know how much you have in each account. So you want to make sure that you have the various accounts set, that you have the numbers posted, and that you've actually shown what is happening to the revenue in the company. Last thing you do is you post a closing trial balance, and then the process starts again. So this screen talks about the basic introduction to financial accounting. Some of the biggest assumptions include the fact that there's two different types of methods of accounting, accrual and cash. Accrual means that you record the expense when it happened. Cash means that you incur the expense when you've actually paid. There's also some general accounting standards that have been set up so that everybody's kind of going by the same methods. So here are some underlying assumptions that there are separate entities, going concerns. All of these things we'll be covering a little bit later on, but more specifically just for the accounting folks. Financial statements have two primary objectives. Businesses actually have two primary objectives: to earn a profit and remain solvent. And then the business statements and financial documents that help show that are the balance sheet, income statement, statement of owner's equity, and cash flows. And those are four documents that everyone in the business pathway needs to know how to complete, how to analyze, and how to justify. Some of the other things we're going to be looking at is double entry accounting, looking at the fundamental accounting method, seeing how transactions flow through a business, and this is what we're going to be doing through the accounting cycle. So those of you in the accounting courses, we're going to be covering those in greater detail. For those of you that are in the other courses, we're going to be covering just the basics. Review this section of the document to go over those overlying and underlying accounting concepts. We'll be talking about these one at a time and doing some practice with them, so you might want to familiarize yourself with these concepts. We've talked about a little bit already that single entry bookkeeping is more like what you do for your checkbook. You have one entry, it affects one account, and that's all that goes on. In accounting, however, we use double entry bookkeeping, and that means that you're going to be making two entries for each item. So review this information quickly, and then head on over to double entry bookkeeping. We've talked about one of the great things about accounting, if you're having trouble with math and other issues, is the fact that you always have to make two entries. So that means that if you make an entry for one account, it has to affect another account to balance out. Now, sometimes those are going to be on one side of the equation. You might balance out your entries by putting in something on an asset side and then something else on an asset side as well. For instance, you might buy inventory for a business, and then you would decrease how much you had in cash. Other times, entries that you're going to make are going to affect both sides of the equation. Something that happens on the asset side is going to be shown on the liability side as well. So review this information as well, and we'll talk about it in class. Everyone has talked a little bit about the accounting equation that assets equals liabilities and owner's equity. And every single transaction that happens in a business is going to affect this equation. One of the first things you want to do when you're analyzing your transactions is to figure out what effect this entry is going to have. Again, accountants do this automatically because they've practiced this and they know what the accounts are. But when you're just starting out, it might help to actually go ahead and do this plotting out before you actually start doing your journal entries and then any posted ledgers. Some assignments will require you to do this, other ones it will be optional. So here are some words to go along with the picture from the previous slide. Again, the basic steps in the accounting cycle. You identify the transactions, analyze the transactions, decide which accounts are affected and in which direction, if it's a credit or a debit. You go ahead and make the journal entries, and these are usually done in chronological order. When you're done with whatever time period that you're working with, you post it to the various ledgers. Then you create a trial balance to make sure that the debits and credits match. If they don't, you make adjusting entries. Next, you prepare an adjusted trial balance, again, just to double check your math. Then you create the various financial statements, balance sheet, income statement, cash flow. At the very end, you make closing entries that transfer the balances of the temporary accounts to owner's equity. And at the very, very end, you create a final trial balance to go ahead and get ready to start the process over yet again. When you're starting with the accounting cycle, the first place the transaction happens, whatever captures that transaction, is known as the source document. There are many different types of source documents for yourself as a person, in your personal accounts and also in your business. You might get a cash receipt, a canceled check. For a business, you might have an invoice that's been sent or received, a credit memo, or you might even include an employee timesheet. These are known as source documents. These are the things that the accountants use to base their entries into the system. It's important that when you're designing these systems, you think about some challenges, you think about what things that you might want to have captured, and how you're going to actually explain them to other folks that are not doing the front end collecting. For instance, if you're trying to figure out how much you're making in a month or a day or an hour, you might need to have some specific systems set up that can record that and capture those things in a period of time. So it might be important that whatever system you're using has a way to capture time for the entries, time for the journal, time for the transaction, what the transaction is. If you're interested in who was in charge of making that transaction, you might need to include those things when you think about how you're designing the system to capture that information. We've already talked a little bit about journal entries. Remember, every time that you make an entry for one account, there has to be a qualifying entry on the other side to balance it out. The general ledger is where you post items after you've posted them to the journals. These are individual ledgers that have specific information about each individual chart of account that you have for your business. It's important to keep these in mind because sometimes in various businesses, one person's whole job is to make sure to keep track of what's going on in these ledgers. So you want to make sure that you're making your posts. You also want to make sure that you're including the reference number from the journal so that you can accurately track the transactions, especially in case there's something that may have been done incorrectly. We've talked about debits and credits, so please review this information at the website provided. Trial balances are created after you've gotten through the first couple of steps of the accounting cycle. It is the first step to make sure that everything that you've done up till now has been done correctly. You do your journal entries, you post your ledgers, you check to see if those entries equal when you add up all the debits and credits. If they don't, you might need to make some adjusting entries. Adjusting entries are just that. They are a way of addressing some issues that may have come up when you were recording your financial information. There are some things that are known as accruals. There are sometimes deferrals. Most of these have to do with how you're dealing with depreciation on items, or if a cash payment is supposed to be received, when will it actually be received. There are definitely rules about how you handle payments that are supposed to be coming, about depreciation of materials. These are all accounted for when you're talking about adjusting entries. So please review this information and we'll talk about it more and have some specific practice in class. Again, all business students will need to know the basics, but the accounting students will need to know some of the more finer points. Closing entries have to do with temporary accounts that are available during a business cycle. They include revenue accounts, expense accounts, income summary accounts, and dividends and returned earnings. To be able to account for how well the business is doing, at the end of each accounting cycle, you need to kind of clear these out and set them to zero. That is done with a closing entry. These closing entries are done right before you create your financial documents. We've already talked a little about the basic 4 financial documents. All business students need to be familiar with these documents, not only how they're created, but how they can be analyzed and where the numbers come from. If you're an entrepreneur student, it's going to be important that you can analyze these statements so that you can help make qualified business decisions. For those of you in the econ class that are running your own businesses and or getting ready to work with a company, it's important that you're able to understand these documents fully so that you can make informed decisions. Please review this information at the website. As we've talked about, just like with any other business, there are basic financial accounting standards that are used throughout the industry. There are some at the local level, some at the national level, some at the international level, but most accountants agree on these standards. It's important for you to know what they are and to become familiar with them. Not 100% with every single one of them, but to know that there are some basic rules that are followed. So we'll be going over the basic rules in class. What you're really going to need to know is the acronyms, know the terms, so you might want to learn the vocab. Go ahead and check out this page. Again, more important for the accounting students, but business students will be expected to know the basics. All students need to become familiar with the concept of a balanced scorecard. This is a way of analyzing, using that business decisions, the business documents, in a way that takes into account goals of the company, where they want to go, targets. It's a cycle of continuous improvement. This is something that is used throughout business, and it is something essential for both accounting students and especially entrepreneur students to become familiar with. Business econ students also need to know this because this is a way that you, as a student who is getting ready to either start your own business and or look at the impact of businesses in the country, this is something that you look at when you're looking at businesses from a slightly larger perspective. So in conclusion, business accounting students, you're going to need to know all the concepts and terms that are presented in this presentation. You're going to be learning and practicing the how-tos through practice exercises and assignments. For the business entree, and econ students, you're going to be expected to be able to explain how these concepts are used to execute and formulate business decisions in both long-term and short-term through case and scenario analysis. So you might be presented with a situation that involves one of these concepts, and you're going to have to explain how the accounting cycle adds to, takes from, how somebody in a position of management or running a company would use these concepts to make decisions. So you're going to have to understand where the numbers come from and how they're made, but you're also going to be then applying them to an actual business. So please review all these concepts at the website presented, and we will be talking about them in the next couple of weeks. There'll be dates as to when we're going to be going over the material, so please pay attention on the accounting haiku for the accounting students, and for the entree and econ students, what you're going to be doing with those materials. Look for a page called accounting.